Hi traders, we're going to go over some key swing trading tips that you can take with you into 2024. A lot of traders get stuck trying to trade the middle of these moves, and quite often they can have tight stop losses, end up getting stopped out before they've even got into any kind of moves. Well, in this video I'm going to show you how you can avoid doing that, and it really goes as simply as you want to sell at highs and you want to buy at lows. Remember, you want to keep things super simple. Now there is a couple of ways that I like to do this. I like to look at a couple of different things in the markets. One, it involves using price action on its own. The other involves using things like volume profile tools, market profile tools, things like that. I'm going to show you more of a price action one based today, but this is a real cool way of just trying to benefit yourself when it comes to trading the markets. Obviously, one thing's important. One thing is trend. Trend is super important when you're looking to try and get onto particular moves, especially as a beginner. But as you become more into the markets, as you become more advanced into the markets, you may be thinking that you don't just want to trade the trend. You want to try and find all types of opportunities. Now, one thing I would say is the easiest way to do this is by spotting large areas of turnaround in price. So I'm looking at euro US dollar here. This is a 4-hour chart, and just visually right now I can just say, well, we know there's some highs around here. We know there's a high here, which is important. I can see that there was some swing highs down through there, some lows down through here. Okay, now the reason why I'm highlighting all these turning points is because this is where I would want to potentially action some trades, right? I would be looking at these going, well, we had a nice turning point here, a really good turning point there, here we had some good turning points to the upside, and so on and so forth. So I would like to say, well, I want to get involved in the market around these areas. That's safe to say, especially when looking in hindsight. We're looking at these areas saying, well, yeah, obviously that makes sense because those are big turning points in the market. Now, how do we actionably get onto these type of trades? That's the problem that a lot of people have in the markets. They're trying to engage all these different things, and what happens or tends to happen is they try and do too much. We try to jump on too many types of trading strategies without just sticking to one. Now, the first one I want to look at is looking at those key highs and lows, right? So let's say we've identified that price has turned from this area in here, but we want to be short. We want to be short because at that point, the market is in an overall downward trend, right? I want to identify where that selling pressure has come from in the past. So the first things first, are we in a downward trend? We are. We can see price making lower highs and, more importantly, lower lows, right? Now, I want to be short because we're in that trend. So where do I want to short from? I want to identify where the selling pressure has come from. Look at that area just in here. We had a consolidation. Price breached that to the downside. We saw aggressive selling coming in at that point. So what I want to do is highlight that area through there. Where did that selling pressure come into the market? It came from around this point where we had a couple of bullish candlesticks. Then the price action change, push price to the downside. Now, candlesticks in general don't give us that much information in the markets, but one key thing that we can just see visually are those key turning points. We can just see that the market turned from buying to selling, and it went aggressive, large candlesticks, right? So if we push that area out, what we're going to look for is if price comes back into this zone, can we look to stay with the trend, and can we look to target the next area, which was support just down through here? Now, obviously you can do this in multiple different ways. You can look at limit orders at this zone. You could place a stop just above the swing high, targeting down at that key zone. That would have been a 3.5R. One way that I really like to do it is by going down to a lower time frame. Now you can see here I've just got the volume profile on. If I just pause that for a second, I'll zoom back to that point and we can look at how price performed when it got into that level. Okay, and you can see here price rallied into that level of resistance. We consolidated, we broke to the downside there, and then we had large volume coming in, pushing price lower. So what I would like to look for is consolidation, a breach of that consolidation. Depending on how aggressive you want to be, that can use a tighter stop loss with that, but putting a stop at the high makes more sense, and then price filtered and traded to the downside. So another thing we can do is go to our 4-hour time frame again, and I'll highlight areas of key support. Now there was one that happened actually really recently, which is something that I looked at in my own personal trading. I was looking at this low down through here. Price had found support, and it found support here previously as well. But what I noticed was we had large move up from this level. So I have highlighted these lows in here. Now why have I highlighted that? Because it's a key turning point. Price has turned around in the market. So I want to be looking for long opportunities. If we don't know if it is going to come back, but if price comes back to that level, and guess what, it comes back into that level, the second step is you can either put a buy limit on here. This one, if you did do the buy limit, which is not something that I would personally do, but if you did and you put your stop loss below the low, you would have been stopped out on this particular one, unless you had an ATR stop, which is something that we talk about in a stop loss management video that we've done recently. However, go and look at how price turns at that point. Do we get key patterns? Do we get double bottom? Do we get inverse head and shoulders? Now this is a 15-minute time frame, and look what we get. We get the double bottom pattern. Okay, price comes into this level, we rally, it comes back in, it gives a false breakout to the downside, it pushes to the upside. So this is one way how you can improve your swing trading in 2024. It's by highlighting these key levels from either a daily or a 4-hour time frame. Wait for price to reach these points and then look for your opportunities. Okay, trying to trade in the middle can be very, very difficult unless you have key trend trading, obviously strategies that you use and implement. But you can see here, obviously big turning point in the market. We did rally to the upside. Then I wouldn't have necessarily been targeting this area up here, because I wouldn't expect price to extend much beyond this point, because it was a big turning point. So I would have looked to enter here, I would have looked to have get out around this high, just in case price did start to turn here and push lower. So hopefully that all made sense. If it did, please subscribe to this video for more, and I'll speak to you in another top tip video coming very soon.